The inflows have been happening over the last 3 months. The demand has been there. That obviously means something, right? I mean, that tells you that people are looking for a safe haven, right?
Most certainly are. So we've seen it all year. We highlighted in our annual outlook. We've reiterated in our mid-year outlook. Financial market uncertainty, monetary policy, and the dollar. These are the factors that are really driving the flows. In the ETF space alone, we've seen about 14 billion plus of dollars flowing into the ETF markets, both in the US and Europe.
Right.
Asia's been a bit muted. And in that case, we've seen mostly the assets flowing into the US, 7.5 billion. And this is really demonstrating to us that both institutional and retail investors are speaking with their dollars.
So when you're talking these billions, I mean, put it into context. Is this record amounts or a huge amount? I mean, give us the perspective.
We're seeing super strong flows in the ETF space. And what we're doing is we're approaching those record highs overall for what the ETF market is holding at about 130 billion worldwide. So those are numbers that are touching up to where we've seen record highs.
And gold itself, the high, how far off the high is it? And is it
1,800? I think right now we're not at the high in terms of where the prices have reached in the past, but we are hitting a really interesting point in the market. We're seeing the price continuing to rise. Of course, we've seen 20% roughly year to date returns in the gold space. But what we're also seeing is that net long positions at COMEX are still reaching highest levels that we've seen in a long time, record highs. We're also seeing that balance out a little bit with the calls and the puts basically coming in line in terms of the expressed interest.
I feel like gold is back because even there was a time, not that long ago that even with some turmoil and some headlines, everybody didn't run to gold. And it's back, I feel like. That's the only way I can really summarize that. So, you see the central bank's interest, right? You're seeing other countries buying up some gold. And we have the Federal Open Market Committee meeting and findings tomorrow, the rate cut possible. How does the central banks play in?
So, a couple of things to say to your comments. The first is that while gold might be doing exceptional in terms of its performance and getting a lot more attention, it's always been a core investment holding for institutional and retail investors. There's always been a level of adoption of gold in the investment landscape. What I could say to you today is simply that the dynamic of what's playing out in geopolitical risks, trade and tariff tensions that are developing, what we saw over the course of the weekend in terms of the attacks in Saudi Arabia, it's raising the level of attention on gold and it's making it a much more pronounced asset, not only in the investment landscape, but like you've said, in the monetary policy landscape as well, as de-dollarization takes place. We're looking at negative rates at 70% of the nations around, in the developed nations around the world. People are looking at it as an asset that really works well in the current economic and the political landscape that we're dealing with.
A lot of folks who are watching this show like to do a multitude of investments. They like to have alternative investments. I know that you have a seasonality with gold also in India. And you watch for terrorism and things like that that could also drive it. So how would you suggest someone invests in gold? What are the top 3 ways of getting a little gold in their portfolio?
I would remind everyone, like you've just highlighted, gold is a global asset and it performs well during good economic times and certainly performs well in bad economic times or times of market stress. So the way that I'd ask people to take a look at gold is take a look at your overall portfolio dynamic, understand exactly what you want to achieve from that, and ultimately you can look at either owning the exchange-traded funds, you can express your interest through buying bars or coins, and you also have other vehicles that actually give you access to gold, or for that matter, you can continue to look at futures, or another way to look at it is to invest in gold mining stocks. A slightly different investment, but still giving you the benefit of the exposure to the commodity.
Do people like that? You think that's a good investment?
I think that people definitely across the spectrum of different ways of owning gold and make the choice based on what they're really comfortable with.
You're not even wearing anything gold. I expected you to have a gold coin, a pin, something.
Gold in my portfolio, which is where it needs to be right now.
Good answer.